In this video, I'm going to help you understand why STRC, the preferred stock from MicroStrategy, is Bitcoin adjacent income with a safety net. Okay, but I'm going to need to set up a little bit of context and do a little bit of a reintroduction. All right, but the goal of this video is to show you how STRC, the preferred share from MicroStrategy, is Bitcoin income with a safety net. So my name is Brian. I talk to affluent 35 to 55-year-olds about how to incorporate Bitcoin into personal finance. What that's doing is that's drawing basically three groups of people to the channel. And I can see this on the back end. It's people that come from Bitcoin only channels and are basically have stacked a lot of Bitcoin. They bought the dips on all the previous bear markets, but they're just getting antsy and want to have kind of like a new, refreshed way of using Bitcoin in their personal finances. And then people come from kind of broader crypto channels where they're just kind of broad-based crypto investor, maybe a little underexposed to Bitcoin, maybe a little frustrated that like alt season isn't coming and just haven't really ever fully grasped where Bitcoin can fit into their personal finances. And then the third bucket is people that are dividend focused or income focused investors, maybe in early retirement or just like the idea of investing specifically for monthly income, monthly cash flow. And those investors, also I would throw like the FIRE movement into that kind of viewer. And they are more open to Bitcoin than they've ever been because of things like the strategy preferred shares. And so those are the three kind of people that I'm talking to all at one time and want to specifically dive in on Stretch. Okay. So there's also another thing I have to when I talk about the strategy preferred shares, the most interesting thing happening to me right now as Bitcoin price is tanking is two things. One is covered call funds that create income, so covered call ETFs. And the second one is the strategy preferred stocks, okay? And they kind of enmesh with each other also. And I'm going to give a little bit of commentary on how my opinions about strategy, the company, and Michael Saylor have changed over time as well. Kind of really speed run through a lot of that. Okay, so this was the timeline as I saw it. First off, I've been embedded deeply in like working inside Bitcoin financial services startups, and so I hadn't been focused as like a Bitcoin equities investor until I left my last job. So I've probably been like a Bitcoin income, Bitcoin equities focused investor, I would say, for like 3 months. Honestly, only 3 months. Prior to that, I didn't really over-index on listening to Saylor or listening to what was happening with MicroStrategy because it just wasn't, it was fine, and I'm just neutral on that. But, you only have so much time per day to absorb new information, and that just kind of like was what it was, right? Because of that, I didn't follow them releasing their original preferred stock at the beginning of 2025. And I also only vaguely heard about kind of the buzz around Misty, which was a covered call fund built on top of MSTR, the strategy common stock. Okay. And I say all that because I missed both those boats. So I've never been a strategy common stock investor, and I've never been a Misty MSTR covered call investor either, okay? Where I entered the story in September and was like, hey, I'm looking to replace my previous W-2 income. Covered call funds sound interesting. I knew that people were holding large Misty positions and that was paying them outsized monthly income, okay? By selling away upsides. Covered calls sell away upside of the stock. You receive that as income, and then you ride some of the upside as long as there's still some upside there. Misty is put out by a company called YieldMax. One problem that YieldMax has, and you can watch other videos on YouTube about this, is that they jam the yield so high up that then the actual price of the stock, of the ETF that you're buying, tends to go down. And so you kind of have to constantly reassess, like, am I making money? Like, what is my total return? And you really have to weigh this, like, am I an income investor or am I a growth investor? Okay. And on top of that, so that was never a fit for me. So that wasn't when I entered in September and I was like, hey, how do I figure out this like income thing? What dividend or what covered call, funds would work well for me? I was like, I also don't have a huge opinion on whether the price of MicroStrategy common stock is going to go up or down. So that was another reason why I didn't really want to dive in on the Yield Max fund. So I was researching covered call funds that just do it on Bitcoin itself because I'm already bullish core Bitcoin. Like I understand core Bitcoin from years of, and I don't mean core like core Bitcoin software. That is such a different thing. It's not that kind of YouTube video. I understand Bitcoin, the commodity, and it going up and down. Okay. So I understand then covered calls. So covered calls on Bitcoin or on the Bitcoin ETF was a lot cleaner of a story for me. Then you do a bunch of research, you realize that BTCI from NEOS funds is the largest assets under management of that simple story. And so that was the one that I chose to participate in. That was the one that I began buying. My first buy for that was around $112,000 Bitcoin is when I got into BTCI. I was at like $59, I think. And I'll update the spread. Here's the spreadsheet of my updated buys of BTCI and STRC right now, like while we're here also, because my personal income portfolio, my personal money is in BTCI and STRC. And I'm getting to the point of like why stretch STRC is Bitcoin income with a safety net. Okay. So I explained, I've explained what covered call funds are. I haven't quite gotten to what the preferred stocks are, why I picked BTCI over Misty. I picked BTCI over Misty because it's on Bitcoin itself, and I don't have to have an opinion about strategy common stock itself. Okay, boom. So got into that, genuinely thankful for that. That because that pays dividends even as Bitcoin is going down. And so to me, it's more efficient right now for the stage of life where I'm at, where I'm trying to create cash flow than it is to be buying the dip on like spot Bitcoin all the way down. So So Strategy has released 4 different kinds of preferred stocks. Preferred just means that in the event of a bankruptcy, there's different layers of who gets paid first. That's all that means. And it just means, and then it also means like who has voting rights on who the CEO is and who's on the board and like that stuff. And so there's all these different layers. For example, common shares have voting rights on who's in the company, but preferred has like higher ranking on like receiving dividends and getting paid out if there's a bankruptcy. Okay. So that's like what a preferred stock is. Stretch is they're one that they're trying to make trade at par value while also paying a high monthly dividend. Okay, so what does that mean? So first off, I guess zooming back just a little bit, there's now 4 of them. There's actually 5 of them now because they just released a specific one for Europe also. So it's very, very, very quickly when you try to learn about this, you can get caught in the crosshairs of just trying to digest all 5 at the same time. Okay. So I would suggest not doing that. And what I hope to convince you here is just to make you realize that learning about Stretch, STRC, is going to make it easier to understand all the others if you want to understand all the others, or why Stretch can fit into kind of probably what you're trying to figure out with this Bitcoin, like wondering if it's going to be in a bear market, wondering if we're going through a prolonged downturn or whatever. Okay. So the features of Stretch, it pays a monthly dividend. It's created to trade at par value. That's the part that's the safety net. So they have great slides that show when it's trading above 101, they lower the dividend. When it's trading below 99, they increase the dividend. And then there's also other things like they have the ability to call back shares and buy them for $101 at any time. And so that's what I mean by a safety net. Like right now, this week, we've seen Stretch trade down, okay? But you have that safety net there because the company can always buy them back at any time. And the price that they buy them back at has to be $101 or higher. Okay, why are they doing this? The reason why they're doing this is because they are trying to create a steady, like competitive like stock to government money markets. They're trying to do, like they understand They understand that regular people don't want to buy Bitcoin. Regular people don't want to buy Bitcoin because the volatility is too high and people can't the average investor out there just doesn't want to participate in the 30% and 40% drawdowns. Okay. Bitcoin people are extremely unique in that they've learned to deal with that. And yeah, they've just learned to deal with it. They either believe so much in the growth or they believe so much in the like philosophy that they've just learned to deal with it. Stretch is targeting a completely different kind of investor. They're targeting people that are looking for just as much yields as they can get for not changing. They're targeting people that just want the high yield savings account, just the classic high yield savings account. The reason why this also fits people that already believe in Bitcoin is because people that already believe in Bitcoin have this constant tension between wanting to go all in on Bitcoin, but also wanting to hold money in a high yield savings account because of, again, dealing with the volatility. Like if you were using Bitcoin as your high yield savings account, and you weren't over collateralized in your high yield savings account and an emergency came up this week when price went to 83,000, that's frustrating. That is super, super frustrating. And that's when you try to talk to people at Thanksgiving dinner about Bitcoin being like the greatest opportunity in the world, that's why it lands flat sometimes. So to me, one of the most interesting things happening in the world is this preferred dividend stock from Strategy. Because they're basically saying they're putting their money where their mouth is. The current yield on it is 10.5%. So they're paying 10.5% annually, but it pays out monthly, okay? Most likely they're going to have to increase it because it's trading too far below the 99 to 101 par value that they want. Which again, that's what I'm telling you. That's what there is the safety net. There's the safety net. Because if you're buying it below the par value that they wanted to trade at, you're basically aligning yourselves with Saylor. You're aligning yourselves with MicroStrategy in creating like this really high quality, dividend stock. Okay. I want to say credit instrument, but again, I'm not trying to be the MicroStrategy channel that like throws out all this financial jargon at you. I'm really trying to cut through all of that because I'm just over it. Like I'm not at that stage. I don't need to be the coolest, smartest finance guy. I don't need to prove that to you. Okay. I want to really cut through it and I want to explain that the reason why STRC can be a good buy for you is because the company wants it to trade between 99 and 100. And so when it's below that, they are extremely incentivized with basically all of their credibility to get it back to that number. So you might as well get paid to go on that ride with them, especially if you're already like philosophically Bitcoin aligned. Because this honestly brought me back around. I noted at the beginning of the video how I've just been kind of pretty neutral on Saylor and just neutral on Saylor and neutral on Strategy. I'll link two videos in the description. One is the third quarter earnings call from Strategy, and one is the overview of when they announced like this, what I'm talking about today, Stretch, STRC. And the fact that they're just attacking like government money markets and short-term like corporate high yield credit, like that kind of stuff. And they're just saying like, we will pay more than that. We will pay more for that and be more collateralized. Like a Bitcoin company being like the best balance sheet in the world, better than the other ones out there, is important for Bitcoin adoption. I've like come to believe that. And also it's just a competitive thing of like, Warren Buffett and Berkshire Hathaway has the largest corporate balance sheet in the United States outside of financial services companies. So outside of banks, outside of insurance companies, Berkshire Hathaway has the largest balance sheet in the country. And like below that are the Mag 7 stocks. Okay. And I like Bitcoin more than the S&P 500. I like Bitcoin more than Berkshire Hathaway. And so it logically follows. And I believe that Bitcoin has the ability to replace fiat money. Like fiat money is not good for the world and it causes a lot of problems in society. So it follows that in order for the world that I want to see happen, like to come to fruition, the Strategy is going to be bigger than Berkshire Hathaway. So might as well participate in the safety net of Stretch getting back to par value. So a little bit rambly, but this is like me genuinely trying to just explain it to you as if you're a friend over at my house. And I appreciate you being here. Okay. So if you made it all the way to the end, I think you would really enjoy being a member of the Bitcoin Personal Finance Think Tank. You just click join next to the subscribe button. It's a few bucks a month. You can cancel anytime. And then join us in the Discord chat. Join us in the Discord chat because it's a growing group of people that are trying to wrestle with how to incorporate Bitcoin into their personal finances while also trying to really knock out creating just a really great lifestyle. And again, we're just really targeting people that are kind of like, we're really targeting people that are 35 to 55 that have been like, you understand Bitcoin or you understand dividend investing. We've got good real estate people. We've got good business like owner people, but it's people that are like philosophically aligned to Bitcoin, but are really trying to crunch through the day to day of how to do that, with Bitcoin. And so would love to have you be a part of that. Thanks so much for hanging out.